Before we start, I want to be very clear about something. This is not an investment pitch. This is not an offering. This is not a solicitation. There are no numbers in this video, no projected returns, no budgets, no performance, no structures, no allocations, no terms, and no minimum investments. All of that comes later, properly, formally, and compliantly through regulated materials, documented disclosures, and a structured suitability process. Today is simply an introduction to an idea, a category, and a way of thinking about wealth that's worth understanding. Let's get into it. Most people think that private real estate investing starts with deals, but it doesn't. It starts with understanding structure, risk, time horizon, capital behavior, demand, and long-term thinking. So instead of starting with numbers, I want to start with logic. When people hear the term real estate investing, they usually think of one thing: buying a property and becoming a landlord. Private market real estate is different. It's real estate exposure without being a landlord. So no tenants, no renovations, no maintenance calls, no midnight emergencies, no property management stress, and no second job. You're investing alongside professional operators through structured vehicles, participating in real assets without running the assets. And there's a reason serious capital has always cared about private markets. Private real estate, infrastructure, and private credit have been core components of institutional portfolios for decades, not because they're magic, but because they behave differently than public markets. In Canada, large pensions, endowments, and family offices allocate significant portions of capital to private assets as part of a long-term portfolio construction. Not hype, not speculation, but portfolio design. So let's be clear, the real question isn't, is private market real estate good? The real question is it right for you? So let's make this practical. This space tends to suit people who think long-term, who don't need daily liquidity, are emotionally calm investors. They understand that real wealth is slow. They prefer structure over excitement. They value diversification, and they think in portfolios, not bets. They can leave capital invested for years, and they care about stability more than speed. So if you need daily access to your money, this probably isn't for you. If you want fast flips, again, it probably isn't for you. And if you want excitement, this certainly isn't for you. And if you need control over every single decision, again, this isn't for you. But if you think in decades instead of quarters, in structure instead of speculation, and in portfolios instead of projects, this is the conversation. One of the reasons private market real estate is appealing to a lot of people is diversification. Many Canadians already have significant capital in public markets, things like stocks, ETFs, mutual funds, and retirement accounts. But private market real estate becomes a way to diversify, not replace those specific investments. And for many structures, investments can often be made using registered funds, RRSPs, TFSAs, LIRAs, and corporate structures. And in many private market models, entry points can begin at around $25,000, making it accessible as a diversification layer, not just for ultra high net worth investors. And for some people, this isn't about moving in all their capital. It's about shaving a portion off the public markets and replacing it into private real assets as part of a balanced portfolio. All right, so that's all good and well, but let's be adults about this. Private market investing is not risk-free. There are construction risks, market risks, financing risks, liquidity risks, operator risks, execution risks, macro risks, timing risks. Private does not mean safe. It means different risks. The goal isn't to eliminate risk. It's to understand it, structure around it, and align it with your tolerance and your time horizon. This is where my second professional role comes in. I'm not only a realtor, I'm also a licensed exempt market dealing representative. That means when I participate in private market investing, it must be done through regulated structures, compliant documentation, formal disclosures, investor suitability assessments, and proper governance frameworks. Suitability matters because private market investing is not for everyone. Different people have different risk tolerance, different liquidity needs, different time horizons, different income stability, goals, and psychology. And that's not marketing, that's responsibility. And over time, serious private market platforms naturally evolve into structured models, formal GPLP frameworks, investor qualification standards, defined minimum investments, capped investor participation, governance structures, reporting systems, capital deployment schedules, return of capital models, long-term investment strategies. Not because it sounds good, but because that's what suitability requires. So this is not about owning a building. It's about building a position inside a long-term real estate portfolio. No landlord life, no operational stress, no second career. Real estate as an asset class, not a job, not a side hustle, not a headache. And over time, capital can move through projects, return, and be reinvested, building scale, diversification, and long-term exposure. So this video isn't an invitation to invest. It's an invitation to understand the space, to understand the category, the structure, the mindset, the logic, the long-term thinking. The compliant material will come. The formal presentations will come. The suitability process will obviously come. The structures itself will come. This is simply the beginning of a conversation. Because real wealth isn't built through hype. It's built through patience, structure, diversification, and fundamentals. This is what that looks like. So if you've ever contemplated shaving a portion of your registered funds and putting those funds into a private market investment, give me a call. My contact details are below. Let's schedule a quick 15 or half an hour phone call. There are a number of projects and a number of opportunities that we can discuss. I'd be happy to do that. As a reminder, I'm a licensed realtor, both on the residential and on the commercial side, but I'm also a licensed exempt market dealing representatives for private investments. So in that category, give me a shout. I'd be happy to discuss it. There are a number of projects, like I said, worth at least contemplating. So that's it for the video, short and sweet. I look forward to taking your call. I look forward to putting these videos together. And until the next video, stay smart, stay invested. I'll see you in the next one.